Okay, we are recording.
Sounds great, man.
Sweet. Well, welcome. Ready to go?
Always.
Sweet.
I got my vat of coffee. I'm ready to rock.
I had to throw some ice into my coffee so it wasn't so hot.
So hot take, I never drink hot beverages. I hate them.
I know you don't.
I absolutely hate them. So I'll have a hot chocolate once or twice a year, and then outside of that, it's all iced. All iced all the time.
The classic hot chocolate. Sweet. So this is Pickers Market episode 2.
Episode 2, baby.
Episode 2. So for just a quick brief intro again, I guess.
Yeah.
Tyler Ellegard, portfolio manager. I've been here at Gradient now for 6 years, or almost 6 years, I should say.
Craziness.
Time flies when you're having fun. But yeah, I managed some of the portfolios here. Came up as an analyst and had some fun and learned from Jeremy and Mike and Keith.
Sorry, man.
Yeah, a little unfortunate, but. And then Jeremy, you've been here for
I'm getting on 8. Yeah.
8.
Yeah. Wow. Yeah.
Crazy.
It does fly. It does fly. It does not feel like 8 years, but it is.
And for those of you who don't know who Jeremy is, he is a senior portfolio manager.
Yeah. Just because I'm older, I think that's really all I get there for that.
So Jeremy, as we transition to this, earnings season has kind of dominated the headlines the last couple of weeks.
Yeah.
So before I get your take on earnings season so far, I just want to go through some of the more significant names because we've had a lot report already.
Yeah.
We've had banks kind of kick us off and they always do. So we've gotten some good information from them. But last week we had United Health, we had Johnson & Johnson, United Airlines, Abbott, D.R. Horton, Netflix, Procter & Gamble, American Express.
Yep.
This week we've had Verizon, GE, UPS. We had Tesla last night. Maybe you can give us a quick thought on that, even though we don't own it here at Gradient. Tesla, Visa, Boston Sci, AT&T, Boeing, and then some upcoming ones. The
big dogs.
The big dogs.
Yeah.
We've got Meta. We've got Alphabet, Microsoft, Amazon, Apple, and then NVIDIA is still a little bit ways away, but we still have them to come up here in May. So that's a lot.
It is.
So I'm just curious for the market, for portfolios, for just any investor in general, why is earnings season so important? And it happens 4 times a year.
Yeah.
So why is it so important?
Yeah, it's a great question because the easy answer is it sets the barometer for how they're doing and what they expect going forward. And, from our perspective, again, that's what we invest in, right? We invest in companies. We don't invest in politicians. We don't invest in the Fed. We invest in companies, right? So for us, this is our time to understand what is really, really happening out there. And first week's always a little tough. First week is financials, right? So you do get a sense. What I like about that is that financials tend to be the first report. Is you get a sense of what their economic growth looks like, and they're funding the world, right? So you do get a sense of our loans growing or not growing and that kind of thing. One that I don't think a lot of people use that I use a ton is the consumer credit data, right? Is that Bank of America, JP Morgan, these are big consumer credit.
Yeah.
They issue credit cards like crazy and they get revenue from spending. So it's a good avenue and approach to understanding how they're doing there too, and how the consumer is doing overall.
I just saw an interesting stat this morning that only 33% of Americans pay off their credit card balance every month. That's from the Philly Fed.
Yeah.
I thought that was interesting.
Yeah. And especially when you put the interest rate on top of that, where 67% are paying loan shark rates.
Yeah. Well, so then it goes to your point that how important these banks and the consumer side of it is. Are they growing those balances, and are they starting to see those default rates, or are the banks actually starting to get concerned about the level of debt that they have on credit cards? So I think that's an interesting point.
Yeah, I think just generally banks have, we look at banks, obviously their earnings as part of how are they doing, but they also have a window into how the economy is doing, right? Because everything kind of rolls through a bank at some particular point in time, whether that's consumer credit, whether that's enterprise credit with regard to I'm going to go buy a building. I'm probably going to go get a loan for doing that. Right. And so those kinds of things. So that it's a good starting point, even though but that first week, you don't get a lot of sense of what is everyone else talking about. You just kind of get what banks are talking about, which is fine. But these next 2 weeks, this week and next week, you get a much broader sense of what's going on. You mentioned UNH, Procter & Gamble, these kinds of firms, very different type of companies, right? And very different elements of what their earnings are going to look like and what they're telling us about the health of their end markets. Both, I mean, I would say earnings season, not to get too deep in the weeds here, but earnings season so far, I think has actually been pretty good. There hasn't been a lot of what I would call massively negative, change of trajectory type of earnings, right? Is that business as usual is kind of what you're hearing most of right now, right? Would you agree with that?
Yeah. And I think, a lot of the companies are actually, and I looked at a lot of the reports last night, a lot of them are beating.
Yeah. Well, yeah.
Granted, they might walk down expectations ahead of the quarter. Yeah. So who knows, but you can see that data and it hasn't been terribly bad, I guess.
No, from our side, it's, I think companies set the bar low enough that they can trip over it in most most circumstances, but that's okay. As long as we understand that, and usually that's at the early part of the year. This one is important, is it because it kind of sets the trajectory for, okay, we set that initial expectation, after when we reported Q4 earnings, we kind of set the outlook for the rest of the year. They're going to come in and probably beat their quarter. But what are they doing for the rest of the year is really what the thought is, hey, are we changing up? Are we walking back those low expectations? We even got to walk them back a little further. I'm not catching it yet, but it is early.
Yeah. Do you pay more attention? And, the headline reports that we always see is earnings were this, revenue was this, did it beat or miss expectations? Do you pay a lot of attention to the current quarter, or do you pay more attention to what the guidance actually is? Like what is a bigger weight of impact in your mind?
Yeah, I think I would call it 70-30. I'd call it 70% guidance. What they're talking about going forward. The 30%, and I could even probably bring that down a little bit. But the 30% is much more. You can kind of find out what the segments of the business are doing and those kinds of things, and they can talk about, but that's all past, right? Is that is this point backward. What people are trying to understand, especially when you're investing in the stocks, is what's this point forward. So the guidance and the commentary around what's going on with their end markets, to me, is much more important. To me, I'll pay a lot more attention to that. But I also want to understand what, when they report their results, like what is driving, when we talk about beats, what's actually driving those beats, right? Because a lot of that can be where positive and negative results, a lot of people
is it the minutia below their actual operating income?
Exactly.
Is it actual beneficial stuff where they're cutting expenses, or is revenue growing faster than costs, or what? It depends on what that beat is, and if it's the crap that nobody cares about.
Exactly right. Like if I'm beating on tax, right, is because I figured out a way to pay 4 cents less in tax, right? I don't care about that. That because that's not something that they're going to is sustainable for the business going forward, and not why I invest.
And you can't count on it.
Yeah, I don't invest for their accounting departments, right? I invest for their businesses. So from my side, that's where the results come into play. Is okay, they beat by 12 cents. Okay, what actually drove that? Was sales better? Was operating margins better? Was it better than expectations? Is usually the bigger component of that. Is they can say people are often surprised by a company that reports like 25% year-over-year growth and is down 10%. Well, we were expecting 30. Right. It's all expectations game in earnings season, if you will, and then expectations setting going forward. Like, do we have to take our growth estimates down? Are we increasing those kinds of things? Trying to understand that's the much bigger component of what earnings actually is.
So to that point, SMCI. The hot
the
high flying semi stock right now.
You go right into it.
Well, so people were expecting them to pre-announce good numbers, and they didn't pre-announce anything yet.
Gotcha.
And so the stock fell 10% because they didn't pre-announce their quarter. Like that's where it's just random things like that can hit a stock 10%. But to your point, if a stock like Microsoft Azure growth, right? People expect 25 to 30% Azure growth. If they come in at 20, that's still a great growth number, but it's not the 25 to 30 that we are expecting. And also you have to tailor back your future expectations for growth on the company, and subsequently the stock will decline.
Yeah, I mean, look at Tesla this morning. You mentioned it. The stock's up way up, and I don't know if it'll end of the day there, but at time of recording, we're way up on a quarter that everybody, I think, pretty objectively says, I think it was bad.
I think it was better than feared.
Right.
It was still bad.
Yeah. Yeah. The fear was pretty, horror movie fear then, because, the quarter's deliveries were all under expectations. And there's a lot of, general positive. Here's the interesting part about that is, I have somewhat of an anti-Tesla bias. I'm going to be completely honest about it. We've never owned it here. I don't really understand.
And I'm guessing you don't own it personally either.
No, never have. But from my side, what I think about when I think about that is, okay, what are people excited by? Because it was up like 10 or 11% when the market opened today. They're excited by Elon sounding more optimistic about certain components of their delivery and their technology systems being better, right? Spending a bunch on AI and doing all those things. What I try to remember is that happens all the time.
Well, and how often does he promise something and it never comes to fruition, or it just gets like Cybertruck? It's been delayed. How many?
They just recalled all of them, didn't they?
4,000 or 4,400, I think was the recall.
How many have they sold?
I don't know.
It's got to be a pretty decent size of the amount they've total sold. But yeah, those are the kinds of things where, if you're looking for pure rationality during price adjustments the next day after earnings, you're probably looking in the wrong spot, right? Is that there's a lot of different things. And what we tend to do is, I look for, okay, I looked at the earnings, I looked at the commentary, I looked at the guidance, I looked at the outlooks. Here's what I kind of mentally think about what that number is going to look like. Where I try to investigate more is where I'm way off in my radar. I've been following a lot of these companies for 10, 15, 20 years at this point now. I kind of got a sense of what's good and what's bad. But when I'm surprised by that, it's like, okay, what's going on? I mean, but that can happen. That happens literally every quarter.
Yeah. So I'm guessing you're more in the camp that Tesla is a auto stock, not a technology stock.
Absolutely.
So the multiple needs to come down to a 10, 12 times, I'm guessing.
Yeah. Why is, why is,
50.
What are they doing that's so different than what all the other auto OEMs are doing?
They're not.
Yeah. That's what I'm wondering.
I guess
for you Tesla bulls out there that want to call and yell at me, absolutely. I'm willing to hear the argument. Outside of Elon is a very smart individual. I totally get that. Been incredible in the things that he's put out. I'm talking about Tesla as a company and Tesla as a stock. I don't understand it.
Yeah. Well, I think, they get the first mover. I get the bull case. I'll say that.
Okay.
But I don't necessarily think it should trade where it is.
Gotcha.
So I'm more in the...
Is it still bigger than all the other OEMs combined? All the other auto manufacturers?
I don't think after the recent collapse.
After the decline now? Okay.
Yeah. But yeah, at one point, Tesla was bigger than all of the other automakers combined.
Yeah.
Which is unbelievably bonkers.
That's a pretty, that would be our nerding out stat or our wait what stat.
Yeah.
It's like, really? Okay.
Well, we'll get to Tesla here.
Okay. Sounds good.
Because actually
we got more Tesla
transition to that right now.
Sure.
So my wait what for the week. So I don't know if you've been following this whole Elon pay package saga at all. So back in 2018, the board approved a $56 billion pay package. Basically no salary, it's all stock options. And they had to meet all these certain criteria. And basically Elon had to grow Tesla by 11x to get all 56 billion.
Okay.
So they achieved that in 2022, which for shareholders is fantastic because Tesla's stock was obviously the market cap size of the stock was much smaller back in 2018 compared to where it was in 2022 and even today. So they met that. It was approved. 73% of the board approved it and good to go. So Elon basically didn't take a paycheck since 2018, just working at Tesla, hoping to get the $56 billion at some point in the stock options. So an investor decided that he was going to sue Tesla because the shareholders didn't understand how easy it would be to grow Tesla 11x. And so he brought it to the Delaware court, and they ended up striking it down.
Okay.
So now what blew my mind, and I think generally speaking, shareholders would be happy with that because now they don't have to pay out $56 billion
Sure.
in stock to dilute their own percentage of Tesla.
Mhm.
Well, the Tesla board is now calling for another vote to give Elon that $56 billion.
Is Elon's brother still on the board?
Yes.
Okay.
But when I saw the headline that they were calling for another shareholder vote to do that, I was like, wait, what? Why? If you've given the fantastic opportunity that you don't have to pay somebody $56 billion because it is not legal, great, right?
Yeah.
But now you want to call another vote for the shareholders after all of this has been, after he's already achieved the level of returns that he's had for the shareholders. Now you want to have them vote on it again?
Yeah.
I don't think they're getting a majority vote on that. Personally,
I don't know how. I mean, it depends on how many does he have already. That he's talked to.
He owns
I have
what,
no
20%. So
Yeah.
I guess he's got
exactly.
he's got
So
20%
yeah,
of the
you
vote,
you
but-
just got to tilt a few of that when you already got a big number of the vote already. Yeah, I mean, it's all so weird, right? At the
Yeah.
end of the day, it's a very weird situation. I think what you said earlier, what made me laugh a little bit was how easy it is to grow anything 11 times over. I say that's very hard.
That's very hard.
That is unicorn stature right there. I mean, again, I don't take anything away from what they've built. Right now, would I own it? No, but from that side, it's like to say this is how easy it would be to do so in after the fact is, in my opinion, somewhat ridiculous. I think the whole situation is ridiculous, right? Whenever you're talking about paying somebody $56 billion, you're bordering on ridiculousness no matter what you do.
Well, to grow anything 11x in 4 years
It's absolutely insane, right? That does not happen.
Astronomical.
Yeah, to say easy to say at all probable during that 4 years ago that you would be that much more sizable, I think is just a silly statement, right? That is extraordinarily hard to do. What he's accomplished there is extraordinarily hard to do. There's no question about it. Whether he deserves 56 billion, I don't know. It seems, and to your point exactly, it's like, okay, they already struck it down. Now your board is the one is saying, no, we really want to pay this out. What is the board, where I haven't followed is why the board thinks is like, we committed to this.
Well, so now you've had Elon, even a couple of months ago before this was struck down, Elon was out saying that, does he want to continue at Tesla?
Okay.
Because he's not motivated.
Oh, okay.
Right? Because he's got X, he's got SpaceX, he's got his tunnel company, he's got the brain chip, whatever you
got
call
it.
that
Yeah,
company,
his implant.
right?
Yep.
Like he's got so many other interests on his mind, and he's an extremely intelligent human being.
Yeah.
So he's losing interest in Tesla.
Okay.
And so I think that's why the board is calling for this, because he initially wanted another pay package to follow up this one for the next 4 or 5 years or whatever time frame he wanted, to kind of keep him engaged in Tesla and innovating and improving and moving the company forward.
Gotcha.
So I think the board is now saying, well, if he doesn't get paid for the last 5 years and we're not going to give him a massive package for the next 5 years, what's to say that he continues at Tesla?
Gotcha.
So I think that really is the core of the issue, regardless of whether or not Elon's brother is still on the board.
Yeah.
But I think that's the core of the board's thought is we need to keep him here because if and we've seen this many times for not just tech companies, but for energy companies, industrial companies, when the founder leaves, when the visionary leaves the company, a lot of times you see the company struggle or the stock price just in general falls because people don't expect it to do as well going forward.
Sure.
Because you don't have that visionary there anymore. So I think that's where the board is worried, is if Elon leaves, the company, Tesla, is kind of in this limbo. I don't think that company's ever going to go away.
Yeah.
I think they'll continue to innovate, but at what rate do they continue to innovate and retain their popularity? Because I think that's where a lot of the Tesla bulls, I think they like Elon more than they like Tesla, but
I think
because
that's 100%
Elon is
correct.
there, they like Tesla.
Got it. It's my proxy for supporting Elon,
Yes.
right? Is that
Investing
this
in-
guy is
yeah.
great. I want to be with the Da Vinci of our generation,
Yes,
right?
yes.
I'll buy Tesla to be on board for that.
Because you can't just go out and buy SpaceX. I mean, I think there's
avenues, but
there's
yeah,
funds that are
it's-
coming out that you can do it.
Yeah, it's weird stuff. Yeah, but the general
For
the general population, Tesla is their avenue
Yes.
in supporting that and understanding it. I get that from that perspective. I mean, Apple's probably the biggest buck the trend in that regard, is that lost Steve Jobs. Tim Cook took over. I remember hearing a lot about that during that Tim's an operator, he's not a visionary and all that stuff. I don't know. They've been okay.
As an operator, I think he's crushed it.
He's been phenomenal.
I mean, the amount of stock that they've bought back since he took over is
that's
astronomical.
Yeah, though that's another weight. And just the numbers that you can throw out when you see what Apple does on a general basis. So, I mean, So is there an argument? Going back to just kind of the salary component of that is, again, that's what I would venture to say is this isn't about money. It's about more stature and willingness to keep doing it, because at the end of the day, we talked about this last week, is that 3 billion versus 8 billion, when you have that many billions, really probably doesn't change anything financially for you. But also comparing yourself, and everybody's guilty of it. I'm not the richest guy on the planet anymore. Maybe I kind of want to be.
I almost wonder if that, there's something of 56 billion. That's like his piggy bank to continue his ventures. Right? Because he's obviously he has outside investors in a lot of these endeavors, but he's the main investor, right? So for him to have an additional 56 billion in his pocket to continue making rockets or continue digging holes for tunnels for the train, like I think that helps. So I think
it does, but just going back on the other side of that, if he were to come out and say, you know what, I'm done building cars, I just don't like it anymore. Well, Tesla would get absolutely railroaded from that. But let's just say I'm going to build tunnels, and he goes out around the country and says, I need money for building tunnels because this is the cool stuff I'm going to do now. I'm venturing to say he's going to, I mean, just going back to the culture of Elon, right? The cult of Elon. I'm venturing to say he would not have problems getting funding.
What's his internet, or the internet or satellite?
Was it Starlink?
Starlink.
Yeah.
So, I mean, how many people do you think have just transitioned to that because it's Elon's company? I think there's other stuff out there, right? Other satellite-esque Wi-Fi providers.
I'm sure he's not the only one who's thinking about it and doing these kinds of things. But yes, the name recognition of Starlink, chances, obviously, I don't know any of the other ones, right? I'm sure they're out there. I know the one that Elon is doing, right? So he's so front and center from that regard that is part of it is, you can trade off reputation to a certain extent after a while. It does happen. Now, again, he's an absolute visionary, and I don't take anything away from him in that regard. But from the side of, I need this money to stay interested, I have a little problem with that.
might be challenging, especially for the shareholders who hear that. He says a lot of weird things.
He says a lot of weird things.
So I guess if you're a Tesla bull, you just kind of let it.
You've kind of already,
you've experienced it. You let it go, and
you're already beyond the pale on that.
Yeah. So, I want to ask you, because now that we've talked about Tesla, Starlink, my wife and I were talking about this the other day. We've never owned or purchased any cable.
Okay.
Like landline cable for TV, right?
Comcast, Charter, these things, right?
We have Comcast Wi-Fi or Xfinity Wi-Fi.
Okay.
But we've never actually bought, we're not news people.
Okay.
We go over to our parents' house and they'll have Care 11 on at night and they're watching the news.
Okay. That's a generation above me even.
We don't do that.
We've never done that either.
And so we've never had to buy cable.
Okay.
I guess.
Yeah.
Because we've just been Netflix, Prime, now Paramount.
How do you watch? Do you watch live TV?
No.
Sport. Okay. You never watch sporting events that are live or anything like that? No.
Not really.
Okay.
Well,
that was the last bastion of people who were, there's just people who just want to turn it on and call it a day, right? It's always in the background. But the last bastion of the folks that, why I still pay for a streaming service is for live events. NBA playoffs are going on right now. I'm not missing that.
So you have cable.
YouTube TV. So what do you call that?
Okay.
What do you call it?
I don't know.
I would call it,
Hybrid?
I would call it cable's cousin. It certainly, I mean, I'm paying a recurring monthly to have access to live TV. That's no different than what cable used to be.
Yeah.
The only difference is I have alternative solutions now that are coming over the air instead of a cable.
Yeah. Well, so the reason this came up is because we've gone on and off of paying for Hulu Live.
Got it.
So I guess if you consider that cable, then we've technically paid.
Yeah.
So I guess we have paid for it. We've never paid for like the cable that you've had to like plug into your TV.
That I understand.
You know.
Yeah.
And we don't have it right now. And every time we get it, and usually I only buy it for the football season.
Yep.
Because that's really the only live sports that I'll watch.
Got it.
Otherwise, I'll just watch highlights, or ESPN Plus has some on it.
Yep.
I mean, not much, and you can't really get local, but I can still watch. So if I ever have the itch to watch something, I'll just have ESPN Plus for $10 for a month. And
interesting.
So usually I only have it for then. And we thought about getting it, but it's like, we just don't ever watch live TV.
Yeah.
And so you can get cheaper packages, like the basic package through Xfinity for $10 a month, but then it's, the extra charges of the box and their whatever fees.
Yeah.
I feel like the list of fees is endless with Comcast. So we thought about doing that, but then at the end of the day, it was like, well, if we ever wanted to just have the basic news channels, then we'll just end up paying $80 for Hulu, because by the time that we pay for the basic channels through Comcast, with all of the fees and the rental for the box, it's basically the same price at the end of the day. Yeah. So we were like, well, let's just not do either.
Right.
We'll just stick.
So the answer is none of the above.
We're just going to stick with the streaming that we have.
So cable's an interesting dichotomy. So I grew up in a cable household, right? Where, you had, if you didn't watch it, you missed it. That's the biggest thing between my generation and the next gen, yours, and then certainly my kids. My kids do not understand the concept of watching something at a particular point in time. They just watch it whenever they want.
This show's on at 6, 7 Central.
That's exactly right. And if you're not there, you're not watching it, or you have to do 27 steps to record the thing.
TiVo.
Exactly right. I had a TiVo. I thought I was the coolest dude on the planet when I first got my TiVo. So that just concept is completely foreign to my kids, right? They're just, and the also concept of watching in a centralized location, right, is they'll watch, they've got the iPad, they go wherever. Sure. They don't care. That's the crazy thing is my kids, I'm the big screen guy, right? I love having huge TVs in my house. They don't care. They couldn't care less. They'll watch it there. But the exact same experience for them on YouTube or on their iPads or anything like that is they don't really discern that at all. Whereas I'm like, I watch my iPad and I'm like, yeah, it's all right, but I'd rather watch it on that huge screen and enjoy that. So it's just, there's just such a shifting going on in that. I don't know what the answer is for the future of cable out. So Comcast especially pivoted pretty aggressively. They understand what's going on, right? They're not fools to this. So they understand that, similar to people still have AOL subscriptions, right? Is that the tail of actual decline is always there, but the tail of actual extinction is so long.
So you think we'll have it in like 5 to 10 years still?
I think absolutely. Yes. People are living longer.
Do you think, I was also thinking about this when my wife and I were talking about this, do you think someone's going to create a service that bundles all of these streaming services together?
Okay, Comcast is actually already kind of trying that.
Because you get bills from, like we have 5, I think, different streaming services right now.
I have like 12.
So does...
I think I have every one of them.
So do you think someone's going to create a package so that you say, I want to pick Netflix, I want Prime, I want Paramount, and I want Peacock, and it's going to like single sign on to all of them for you, and then you just have one payment, and then you can go in and pick and choose different ones? I think it's almost like cable at that point. Like, you're still bundling cable.
Yeah.
but we haven't seen that aspect of basically, like I remember when Amazon came up and everybody said that the brick and mortar store was going to die.
Yep.
So then everybody went online, and then post COVID, you started to see some people coming back to brick and mortar.
Yeah.
So is that going to be the cycle of this? Is we get away from cable and the bundle, and then we're going to go to just strictly streaming, and then we're going to come back to this bundle of streaming that's basically cable?
I think so. I think, I don't think it'll be in the same packaged way. Do you care that if you pay multiple people, or do you not care? I just wonder.
I don't care, but you lose track of who you're paying.
You lose track, and I think they're okay.
I mean,
with that.
They probably like that,
Yeah.
right? Like all of a sudden you get a bill from Discovery for $5. I'm like, how long have I been paying for this?
Right. And so I think from my, when the streaming evolution, the initial part about it was everybody and their mother is going to have a streaming service, right? Well, you're seeing that economically it just doesn't work.
No.
So the consolidation is now occurring. When they get consolidated to a level when there's 3 and 4 of them, then maybe. But I think they will all be very hesitant. Disney's probably going to be around, right?
Yeah.
Netflix is probably going to be around. So let's take those two. Now, who is going to come in from another firm and say, you guys have to now come through me? They're going to fight that pretty hard, because they're going to be like, I don't want to be a channel, right? I don't want to be somebody's selection. I want to be the hub of that. So I want to control that. I want to control that consumer content. I want to control I don't want to have to worry about access points. So I think it's going to be very hard to do that, but your TVs are starting to do that for you, right? They're getting better every time about, if you go to Amazon and you just search, it shows you different where the streaming service it's on. So there's avenues and improvements. I think AI could be an improvement there too.
But they just switch their shows back. Like someone buys the show or the rights for the show for the next 3 years, and then it switches back to this platform. I feel like from the consumer standpoint, it'd be really nice just to log into one thing, and all of your platforms are single signed on, so you can search for any of the shows that are on all of those platforms, and then call it a day.
I think it would be great from a consumer side. I don't know if the businesses would like it. Disney and Netflix are not going to want to be a click, and just say, I'm going to watch Disney Plus today. I'm just going to go to that Disney Plus channel. They don't want to be that anymore. They want to be the hub of your entertainment content. They're going to fight that hard. I think YouTube to a certain extent, and I think Amazon to a certain extent probably have the best shot at doing that, just because of all the things you're starting to put in your house that are smart around those kind of ecosystems, and to being able to tell Alexa, hey, run up this show for me, and it'll just sign you through the service. I think that you could get there, but I think them having just a menu of options and always single sign on, and that's everything, that it's just going to be hard, given that these are not small businesses. When we consolidate, these things are going to be big entertainment businesses. I don't think they want to go back to having to pay somebody like a cable for access points going forward.
That makes sense.
Yeah.
All right. So one last thing before we close out here for our second episode. I was going to ask you about Uber and Lyft because they're leaving Minneapolis.
Yeah.
But
potentially.
We'll see. But Minnesota sports had a big win last night.
Yes, they did.
So I'm curious to get your thoughts on the Minnesota Timberwolves.
Okay.
I'm not a basketball guy.
Yeah, I know.
I'm a baseball guy. So I'm more for the football, hockey. So when Minnesota sports and hockey start to get good again, then I can add some value to this conversation about sports. But do you think they can actually make a run at the finals this year?
Yes. Short answer is yes, but the problem is next round.
Okay.
Well, okay. I'm going to caveat.
Next round be Denver? Is that the matchup?
Yeah.
Okay.
And for a lot of people, that could be, because if you look at the other side of the avenue, right, it's Clippers, it's OKC, and it's Dallas. I think if you were to poll everyone, especially now that Minnesota has a 2-0 lead on Phoenix. I mean, Phoenix is still a scary team. Don't get me wrong. This is not over yet.
KD, Booker.
Exactly right. I feel a little, I feel weird about dismissing that at the end of the day.
And
even though we're only up 2-0.
We're going to Phoenix, right?
And we're going to Phoenix now.
The first 2 games were home. We're here. So now we're going there.
Yeah, and we're very good at home. Why I say yes, we could make a run and we can actually do it is this is the first time in a very long time where the Timberwolves actually rely on defense as kind of their lead. And they're very, very, very good at it. They have an identity. is that we just out defend you.
Okay.
We stop you. Our offense can be stinky from time to time, but we're going to make it so it's always pretty difficult for you.
Okay.
I like that part about that, but Denver's good, man. So, well, Phoenix, like I said, Phoenix, series is not over. I'm not jinxing myself, knock on wood or whatever. Here you go. But from that side, the next round, I think people that follow the NBA closely would love that series just to see. I think we give Denver, to be honest, I think we give Denver the most problems. And we'd also, if we got to the finals, we would give the Celtics the most problems because we're huge. Our starting line is 7 foot, and 6'10". These are big guys that can run around. So we're very difficult to play. Nobody really wants to play us, which as a Timberwolves fan is the weirdest thing for me to say because it's been so horrible for so long. So
basically since Kevin Garnett.
2004. How old were you in 2004?
10.
10. Yeah, you were my younger daughter's age at the time they were last good. So that where they could go as far. But again, could they absolutely get swept by the Nuggets? Sure. It's possible. Jokic is just that good. So it's one of those things, to turn it to the hockey side, like I don't know hockey at all. But I always, the hockey always to me, it seems like the hot goalie can just change everything, right? Jokic is about as close as the NBA gets to a hot goalie.
Okay.
He can just change everything.
Yeah.
So that's always where, could it happen? Sure. I think we'd give him a good run though.
All right.
Yeah. We'll see.
We'll see. And hopefully we can have some positive things out of Minnesota sports here.
Oh, it'd be nice once in a while here.
We need some celebration. I think if you add up, another stat that I saw was if you add up every sports team and the seasons that they have not won a championship, Minnesota has. I think they counted the 4 main sports teams here.
Yeah,
I think it's been 109 seasons that we have not had a championship.
Yeah, and we haven't even really been in contention for one.
No.
Like
it's just been brutal.
We just got smashed in the NFC Championship games with the Vikings, and Wild's been terrible pretty much for the most part. Timberwolves
entire year.
There's books written about how bad the Timberwolves are, and the Twins, they get to the playoffs and then they get mopped.
Yeah.
So we haven't even had like the thrill of a long run
or even finals.
Exactly. Just give us a little sunshine here. So we'll see what happens. I'm as we make fun of Pickers Market, I'm also cautiously optimistic on the Wolves as well, as if you're playing your financial lingo bingo card right now.
Boy. All right. Well, I think that wraps us up for today.
Sounds good.
So we'll be back next week with episode 3. Maybe we'll bring a guest on. We'll see.
I think we could do that.
Yeah.
All right, man.
All right.
Cool.
Thank you.
Thank you.
We probably talked right over.